slide that shows you gross merchandise volume of Amazon over the past 10 years. And this is really an exponential growth story from Amazon, growing from a relatively small player within retail to what we will hope to see being a close to $200 billion retailer this year in terms of gross merchandise volume. As Scott explained, part of that is first-party volume, and another part of that is third-party marketplace volume as well. And what's really amazing about Amazon, part of what's really fun about following Amazon, is the constant pace of change. Amazon's like a living, breathing organism, constantly evolving, layering on new services and functionality and features for consumers. And that is a struggle for many of you to keep up with, to compete with. So the data that I present to you today hopefully sheds a little more light on what they're doing and perhaps how best to grow along with Amazon. To put a little more color on this, if you look at Amazon over the first 10 years of its existence, it was remarkably close to Walmart in Walmart's first 10 years as a company in terms of revenue growth. And it followed almost the same curve, if you see on this chart, from years 1 through roughly year 11. And what happened, and what I think has gotten a lot of attention justifiably with Amazon, is back in 2005, 2006, the green line emerged, which is adding the third-party marketplace. And this third-party marketplace has accelerated Amazon well above Walmart's original growth rates back in its first 20 years. And if you were to carry out these lines another 10 years, what you'd see is that Amazon today is still roughly 1/4 the size of Walmart. And so one of the things we're going to talk about today is Amazon's willingness to not generate much in the way of profit margin. And the idea around that is it's really early for Amazon to be harvesting its business to generate positive cash flow and positive profit margin. It's really early innings still for Amazon. What we're going to do is dig a little bit deeper into some of Amazon's key areas of investment. And a lot of these are very costly and they're complex. And as Amazon gains a lot of scale, there's a lot of nuance and a lot of details around this. But categories and selection, new services both for consumers and enterprises. Amazon Prime obviously is a big area of investment for the company. Infrastructure and logistics. Amazon is a cloud computing company, as Scott mentioned. It's also a fulfillment and logistics company. Software and personalization, artificial intelligence, machine learning. These are all everyday terms at Amazon. How computers can present a better experience for Amazon's customers, both consumers and enterprises. Technology is the underpinning common denominator, if you will, behind Amazon's strategy. And low prices, I put this last. A lot of us in the retail world have an impression that low prices is Amazon's priority. It's become less of a priority at Amazon as the full ecosystem has been built out and the company is vertically integrated in a lot of different areas, and we'll talk about that. I mentioned earlier about profit margins, and this is the tricky dance about Amazon, especially from Wall Street's perspective. What is Wall Street? What are Amazon shareholders, their owners, willing to accept in terms of profit as Amazon grows in each of these different areas? And I know this is a frustrating point for a lot of competitors, and what we obviously know from the market is that Amazon has been given the green light by its investors to invest a lot of money and to show a relatively low profit margin. This is Amazon. The red line, for those of you in the back, is Amazon compared to other retailers, Walmart, Target, and Best Buy. Amazon, without having the infrastructure of bricks and mortar stores and that employee base, still has a significantly lower margin than larger retailers. That may not last forever, but today continues to be a very interesting dynamic and trend at Amazon. In fact, internationally, they're still losing money. That's the bottom grayish line. And we expect them to continue losing money internationally as they build out in India, Latin America, Australia, and other geographies over the next 3 to 5 years. I mentioned the green light from Wall Street. This slide doesn't have the latest quarter updated, but even as Amazon's profit margins have been declining, the stock continues to move up and to the right. So the stock is already towards the upper limit of that chart on the right-hand side. And so it's inversely correlated, if you will, to margins. Scott did mention that there was a surprise profit beat in the first quarter, although on an absolute dollar basis, it's still pretty thin. Cloud computing, web services, that's one of the most exciting areas, I think, from an investor's point of view about Amazon. And if you think about it, this may be a fairly nebulous term, and for those of you in the retail world, this may not seem relevant, but in actuality, Amazon as a technology company, the reason why they're uniquely able to be a leader and a successful company within cloud computing is that they're leveraging all of what they've built to support the retail side of the business, all the servers and the data, and then having this monetized, commercialized through web services. What that means is that all the learning from that then gets parlayed back into the retail business. So from a technology standpoint, Amazon is benefiting from having a separate cloud computing business. And this is a $6 to $7 billion business, a run rate annualized business, but it's a big part of Wall Street's evaluation of the company and could be roughly 20% of the market capitalization of Amazon. So that also helps from that perspective. Advertising is another area that Amazon has a focus on growing. This is a close to $1 billion business. Again, it leverages Amazon's data. Amazon is a treasure trove of data. I mentioned machine learning, artificial intelligence, data analytics. Amazon is at some point going to really push the pedal on advertising, and it knows a lot more about its customers than even Google or Facebook and every other internet platform regarding spending. And so expect to see Amazon do a lot more with advertising over the years, perhaps as Alibaba as a model. We'll see how that takes place. And in some international markets, that may be a bigger initiative for Amazon. So the results of Amazon having advertising and AWS and the third-party marketplace, as Scott already articulated to you, is that the core retail, the first-party business of Amazon, although it is the single largest bucket of revenue, it essentially operates at break-even. So as a competitor, as a supplier to Amazon, in order to compete on a first-party level with Amazon, you have to be willing to sell your products on a net margin basis at roughly zero profit margin. And that's obviously a daunting situation for many. And as we're seeing, other retailers, competitors to Amazon, are having to redeploy resources in areas that give them an ability to subsidize their own first-party retail business. So I use the word subsidy as a way of explaining how the marketplace, how AWS, how these other revenue streams are subsidizing Amazon's retail business and making it very difficult in some cases for competitors. Now, the other part of what Amazon is doing clearly is arming for a bigger battle, an arms race within fulfillment logistics and data centers. And this is, Scott's right, Amazon doesn't report a lot of financial information. If you dig a little bit deeper into some of their SEC filings, you do get a little bit more detail about what they're spending on fulfillment centers and data centers. And looks like their revenue chart, the GMV chart, but Amazon is opening up new capacity in fulfillment and data centers at a very fast clip. This is just the last 9 years previous to 2015, to give you an example there. Big investments, and we'll talk more about this in a minute. In terms of square footage, you can see that both in terms of data centers and fulfillment centers, North America and international, Amazon is creating massive capacity. And this is also looking ahead in terms of what they plan to roll out in terms of new products and services. All in all, we count roughly 85 facilities in North America, out of about 150 distribution facilities worldwide, 100 million square feet. And these facilities are not just traditional fulfillment centers, they're local sortation centers, they're return centers, replenishment, and Amazon Fresh has their own centers as well. And these are in a number of different countries. Amazon's core markets, including the USA, Canada, Germany, UK, other countries in Europe. In addition, Japan, China. India is a huge market for Amazon on a relative basis. They're the #2 player there. They added fulfillment centers aggressively in China. They're doing the same thing in India now. And from what we understand, Australia and Mexico are coming this year as well. So Amazon continues to globalize in terms of fulfillment. One of the more interesting trends or changes that Amazon has made to its fulfillment strategy in the past 2 years is the addition of sortation centers. And we see this predominantly in the US. And this follows a couple of holidays where there have been shipping issues with UPS and FedEx and maybe some of the other maybe unfairly pointed at some logistics providers, but there were shipping issues in a couple of the holidays. Amazon is also, as we'll talk about, trying to become a local commerce, local delivery company. And this is really interesting. Not only does this allow Amazon to take more control over the local delivery experience, it also lowers their shipping costs. So they don't have to pay shippers to ship from Reno, Nevada, down to Texas or across the country to Massachusetts. A lot of the inventory is being held locally within larger population centers. And this is also concurrent with Amazon's push into grocery and CPG and areas of significant growth for Amazon. Long term, Amazon is becoming more like a fulfillment and logistics company, just as they have a cloud computing company. And what this means is that companies, the traditional shipping companies, will ultimately see Amazon as a competitor. So look out, UPS and FedEx, for Amazon in the coming years. So turning now to some data, more data that we track for Amazon, and this is partly out of the situation where there isn't much transparency, but we look at every quarter the amount of inventory, amount of selection that Amazon has on its core .com site, and this will explain to you visually a bit how the marketplace has really helped accelerate Amazon's position within a lot of those EGM categories that Scott mentioned earlier. So, from an aggregated basis, we look at 2 years ago, Amazon, we tracked about a little over, we'll say close to 200 million different SKUs that Amazon sells in selection. This includes media, so a lot of individual media items, and that does push up the number a bit. But just 2 years later, we're looking at that number having roughly doubled, or on track to roughly double by the end of this year. And that's an enormous increase in selection. And as Amazon becomes a de facto search engine for consumer shopping, they can find pretty much anything on Amazon. And I'll give you a little bit of detail on some of the categories where we've seen the biggest amount of growth in selection on Amazon.com. And again, I'm going to run through these pretty quickly, but if you like the details, just shoot me an email at the end, and I'll happy to share with you the data in detailed form. Home and kitchen, using Amazon's descriptions for the categories, you can see a significant increase in the amount of selection. Consumer electronics, no surprise, they're leveraging the third-party marketplace to grow that category. Industrial supplies, and this is also a nebulous category, but their industrial category, Amazon Supply, and other subcategories, seen a massive increase in the amount of selection. And we hear Amazon has big plans for this area of their business, the B2B business, over the next 2 years. Health and personal care, beauty is, although still relatively small in terms of number of items, Amazon is certainly seeing some significant growth there. Office products. And then as a result of this growth in these EGM categories, what we're also witnessing is a decrease in the percent of the selection that is sourced from Amazon's first-party business. So in the last 2 years, it's moved from over 20% of items to less than 20%. That long tail, if you will, of items available for sale on Amazon.